In this video we'll explore the 6 main triple candlesticks patterns. These patterns offer unique clues about potential trend reversals. By understanding these patterns, you'll be better equipped to navigate the complex world of trading and improve your overall strategy. Let's dive in and unlock the power of these essential charting techniques. 1. The morning star. This is a bullish reversal pattern that occurs at the end of a downtrend. It consists of 3 candlesticks. First, a long bearish candle. Then a small-bodied candle, indicating indecision, that gaps lower. And finally a long bullish candle that closes above the midpoint of the first candle. The pattern suggests a shift in sentiment from bearish to bullish. 2. The evening star. The evening star is the opposite of the morning star, indicating a bearish reversal. It appears at the end of an uptrend and consists of, first, a long bullish candle. Then a small-bodied candle that gaps higher. And a long bearish candle that closes below the midpoint of the first candle. This pattern signals a shift from bullish to bearish sentiment. 3. The 3 white soldiers. This bullish pattern appears during a downtrend. It consists of 3 consecutive long-bodied bullish candles with increasing closing prices. Each candle opens within the previous candle's body and closes near its high. This signifies strong buying pressure and potential trend reversal. 4. The 3 black crows. This bearish pattern emerges during an uptrend. It features 3 consecutive long-bodied bearish candles with decreasing closing prices. Each candle opens within the previous candle's body and closes near its low. It suggests strong selling pressure and a potential trend reversal. 5. The 3 inside up. It's another bullish reversal pattern. It consists of a long bearish candle. Then a bullish candle that closes within the first candle's body. And a third bullish candle that closes higher than the second one. This pattern indicates that bulls are gradually gaining control over bears. 6. The 3 inside down. The 3 inside down is a bearish reversal pattern. It consists of a first long bullish candle. Then a bearish candle that closes within the first candle's body. And finally a third bearish candle that closes lower than the second one. This pattern signals that bears are progressively overpowering bulls. Do not forget to use other tools like technical indicators to confirm these patterns. Thanks for watching.